Hi everyone, welcome back to Listen. This episode is 5 English phrases finance professionals use at work. Today's episode is the kind of English you hear in meetings, reports, investor calls, budget reviews, and financial planning sessions. So if you work in finance or accounting, corporate planning, startups, scale-ups, investment or financial analysis, these 5 terms I'm going to explain are essential. You may already know them, but today we're going to make sure that you can explain them clearly, use them correctly, and sound confident when you speak. One of the most important concepts in finance is cash flow. Cash flow is the movement of money into and out of a business. In professional finance English, there are 3 main types of cash flow. We have operating cash flow, that's money from the core business activities. Investing cash flow, that's money that's used for or gained from investments. And then there's financing cash flow. This is money from loans or investors or repayment. For example, our operating cash flow improved this quarter. This means that the company is generating more cash from its normal business operations, operating cash flow. You'll often hear the business is profitable, but cash flow is tight. This is very important. This means the company makes profit, but doesn't have enough cash available right now. Cash flow is tight, restricted if you like. The second term, or the second piece of vocabulary, revenue versus profit. This is a classic finance distinction, revenue and profit. Revenue is the total income a company earns from sales, and profit is what remains after all expenses are paid. Many non-finance professionals confuse these, but finance professionals never do. For example, revenue increased by 15%, but profit stayed flat. That means the company sold more, 15% more revenue, but costs also increased. Another example you might hear, well, high revenue doesn't always mean high profit. In finance English, this shows analytical thinking, not just numbers. Then we have assets and liabilities. We're talking about the balance sheet here. Assets and liabilities. Assets are what a company owns: cash, property, equipment, inventory. And liabilities are what a company owes: loans, debts, unpaid expenses. This language is used constantly in financial statements and audits and valuations. As an example, you'll hear the company has strong assets but high liabilities. This means the company owns valuable things, but it also owes a lot of money. Another example would be, we need to reduce liabilities before taking on new debt. And that means the company should pay off existing obligations first. Then we have COGS, COGS, cost of goods sold. This is a very specific but very common finance term. COGS, COGS, or cost of goods sold. This refers to the direct costs involved in producing goods or services. So this includes raw materials, direct labor, manufacturing costs. It doesn't include marketing, rent. For example, you'll hear people say COGS increased, COGS increased, due to higher raw material costs, meaning it's more expensive to produce the product. Another example would be reducing COGS will improve gross margin. This shows strategic financial thinking, not just accounting. And number 5, burn rate and runway. These are the final terms for this episode. And these terms are especially common in startups and growing companies. Burn rate and runway. Burn rate is simply how fast the company is spending cash. And the runway is how long the company can survive before cash runs out. These terms are critical in things like investor meetings, startup finance, crisis planning. You'll hear people say things like, our burn rate is $100,000 per month. That means that's how much cash the company spends every month. Another example could be, at this burn rate, we have 6 months of runway. The translation of that would be, the company can survive 6 more months without new funding. So a quick recap on this finance English. Cash flow is money moving in and out of a business. Revenue versus profit. This is income versus earnings after expenses. Assets and liabilities. Assets are what a company owns. Liabilities are what a company owes. COGS, COGS, the direct costs of production. And burn rate and runway. Burn rate is cash spending speed, and runway is the survival time. These terms help you speak clearly with financial teams, explain numbers confidently, and they help you to sound professional in meetings and reports. As a final thought, finance English isn't about using big words. It's about using precise language. When you understand these terms properly, when you understand them deeply, you don't just speak English, you are thinking in finance. And that's everything for this episode. Thank you for listening. This is Listen. Please share, subscribe, and I'll see you in the next episode. Until then, bye-bye for now.